Hello, this is Bob Joyner, and in this video we're going to be talking about trading psychology and how to stop the self-sabotage. We'll be asking the question, why do I continue to do the things that I should not do? Of course, this doesn't relate just to trading, but in this video we're going to be talking about specifically about trading and why we do the certain things that we do as traders. When we talk about trading psychology, many traders think we're talking about the emotions that we experience while we're trading, and we definitely have a lot of emotions. We know that trading based on emotions is not a good idea. For example, if we can just had a money-making trade, then we tend to take on too much risk on our next trade. The emotion of overconfidence seems to lead to the trading error of placing too much risk on a single trade. And that's one example of self-sabotage. Often, however, the emotions we experience are due to disappointment about the way that we're trading. We make the same mistakes over and over again, and those mistakes end with the results of losing a lot of money or even crashing our accounts. And we just don't seem to be able to get past these same repeated mistakes in our trading. This video is for you if you find yourself repeating the same trading mistakes. For example, see if any of these situations that I've listed here sound familiar to you. Using too much equity on one trade. Not stopping out on a trade that has already clearly moved against you. Starting a trade with the intention of it being a day trade until it moves against you, and then you hold it overnight hoping it works out the next day. Never done that one, right? Using one time frame as the basis for the trade and then going to a higher time frame chart to rationalize the fact that we're going to hold that existing trade as a losing trade. We know a trade we're holding is no longer qualified, so we ignore the charts, we ignore the P&L column, so we just don't have to face a reality of the loss. Any of those sound familiar to you? If they do, those are just a few examples of the self-sabotaging behavior we can have as traders. And sometimes we think that we're just stuck repeating those same patterns over and over again. These trading decisions often result in the negative emotions we've been talking about anger, disappointment, low self-esteem. But the emotions are actually not the problem. Everybody's focused on emotions when we talk about trading psychology. The problem is that we repeat certain behaviors in certain situations even when those behaviors are not in our best interest. Why do we do that? Why do we keep repeating self-sabotaging behaviors? The fact is that all of us live with a set of automatic responses in different situations. If someone cuts us off, let's say for example on the highway, we have an automatic response to that. It's usually anger, right? You don't even think about it, just boom, you're angry, right? And that response is often just an automated response. We go back to the old, fight or flight type pattern you've heard of before. The bear's chasing us in the woods. Well, we don't need to sit there and think about what we should do. We know we have to do something, and quickly. So the survival gene kicks in, and our ancestors learned to run away from the bear, those who survived at least. That response worked so well that it became ingrained in us, and it became a survival mechanism and a good automatic response to a situation of danger. The question is, does that same automatic response still serve us, or are we just accepting the automatic response as that's just something I do? If you've ever uttered that sentence, it's actually an escape clause. It's actually an excuse. That's just the way I do things. That's the way it's always been. That's the way it's always going to be, blah, blah, blah. When we place ourselves in certain situations, we have certain automatic responses. For example, a trade moves against us. Our automatic response may be we become anxious. Blood flows away from the brain as our fear of loss kicks in. We hold the trade for fear of loss, because maybe if we hold it, it will move in our favor and we won't have a losing trade. We won't be wrong. And we support that emotional decision via some rationalization, some belief. But it's more than that. So we have the situation, we have the automatic response, and then we have the consequences and emotions. So for example, the trade moves against us. That's the situation that we're find ourselves placed in as traders. It's going to happen nearly every day, right? A trade moves against us. Our automatic response are some of the things I just mentioned. We hold the trade for fear of loss, because maybe if we hold, we won't be wrong. We won't lose money, which we have a big fear of course. But the consequences and emotions that follow from that automatic response are not ones necessarily that serve us. We lose money on the trade. We feel anger and remorse. We develop low self-esteem, and our lack of confidence increases. We vow to do better next time, and so we try again. And then the same thing happens again. We get in that same almost identical situation, and then we have that same automatic response. The same thing will continue to occur again and again until we recognize and break the automatic response that no longer serves us. The prescribed fix is often the word discipline. I just need to be more disciplined in my trading. Just do it, right? But the disciplined fix fails to address the real problem at its core. The real problem has nothing to do with willpower or discipline. The real problem has nothing to do with not trading without emotions or anything like that. There are, of course, certain things we can do in trading to protect us from the cycle of self-sabotage. For example, using risk-based equity position, using stops, etc. These are all things we can do to protect us from the automatic responses that our lizard brain uses, even though those responses no longer serve us. Those things are important, and I've recorded several videos already about how to measure risk and how to place stops, and those videos are on my YouTube channel and you can check them out. But the real question is, how do we break the cycle? How do we stop the pattern of self-sabotage that will creep up in other areas of our trading, often when we least expect it? To fix the problem, we need to break the connection. If an automated response no longer serves us, then we need to interrupt the current automatic response and build a new pathway in our brain. So that situation produces this normal occurrence, this normal automatic response. We need to break that, and we need to redirect that response to a new automatic response, and we need to build that automatic response so that we do it every single time in our trading. A book that I highly recommend and that some of these thoughts come out of is a book called Designing the Mind. And here's a quote from inside that book: "You cannot keep living your life without adjusting the algorithms which led you to faulty decisions." So the idea here is that our automatic responses are more like, coded algorithms. We get in this situation, we have this automatic response, all right? But the good news is that all that can change. Those automatic responses do not have to stay in place. We can change the algorithms. We have to examine our automated responses and discover what's behind them. So in between the situation and the automatic response, there's a whole host of things that could be impacting why we go to that automatic response. It could be biases that we have, beliefs that we have, assumptions. It's convenient to do that quick response. Blame, fear of loss, fear of gain, and many other things could be underneath that automatic response and supporting that, and the reason that we don't want to give it up, actually. And if those things that are causing us to fail as traders are identified, and we construct new automatic algorithms for our brain, automatic responses that are more aligned with our stated goals and desires, then our behavior will change, and so will our results. So how do we do that? Obviously, we're almost at the end of this video, so there is a part 2, and it's called Trading Psychology: How to Stop the Self-Sabotage. You see the different picture of the guy there raising his hands and being happy, right? That video is coming out next week, depending on when you're watching this. It may be already available. And in the second part of this video, we'll look at tools and techniques to help you break that cycle, scripts that you can use, recommended books, and specific steps you can take to break the patterns of automatic responses and develop a new trader mindset that will serve you. So I hope you found this interesting. The good news is that you can change. Okay, the brain's plasticity has now been well documented. What that means is that the brain is very adaptable and amendable. It can change. It is, if we know how to construct patterns in the algorithms that create those automatic responses, then we can change things. Our automatic behavior does not have to stay the same. We can change. Habitual and automatic patterns of behavior can be altered. New patterns and responses can be built, and it doesn't take years or even months to see the positive results. So until that video comes out, here are a couple other videos that you might want to watch next. And the other video, like I said, stay tuned, will be coming out soon. Thanks for watching.